Good afternoon, friends. Important video on very important topic about issuance of credit note in GST. When this credit note can be issued, what is the time limit, what are the compliances when a credit note is being issued, and who can issue credit note, supplier or recipient. This video mainly focusing on credit note concept. Credit note as stated under section 34 subsection 1 and subsection 2. It is saying that credit note can be issued by the supplier of goods or services. When there are four situations. First, if supplier has charged excess taxable value, so as against 100 rupees, he has charged 120 rupees, or he has charged excess tax as against 18 rupees, he has charged 20 rupees. Third, when there is return of goods by the recipient buyer. And fourth, where there is deficiency in goods or services, and on account of deficiency, supplier is compensating to the buyer. So four situations, supplier can issue credit note to the recipient or buyer. What time? By 30th November of next financial year, following the end of relevant financial year in which this credit note is being issued. So 30th November provision got changed with effect from 1st October 2022. Prior to that, this period was September. So earliest of two is being stated, 30th November or date of furnishing annual return, whichever is earlier. And a condition is being prescribed that supplier cannot adjust the tax which is being charged on a credit note with its outward tax liability if he has passed on any incidence of such tax. That is what it is being prescribed. So credit note, four situation, time limit, earliest up to 30th November or date of furnishing annual return, whichever is earlier, and condition that such supplier should not have passed on the incidence to any other person of that tax component for which credit note is being issued and adjusted with its outward tax liability. This is about provision. Coming to section 15 subsection 3 clause B. In GST, you must be knowing that the concept of discount or incentive. When you are giving, a supplier is giving discount or incentive to the buyer at the time of supply, then he can always show such discount or incentive on the invoice itself, tax invoice. And he should charge GST only net of discount or incentive. But sometimes there is a concept called post supply. So some incentive and discount which is passed on by the supplier to the buyer, to the recipient, which is called post supply. So section 15 subsection 3 clause B has created three conditions. What is the condition? Condition number 1. Whenever supplier is passing on any discount or incentive post supply, it is possible only when there is agreement entered between supplier and recipient. before or at the time of supply. So there has to be agreement. For passing on this post-supply incentive or discount by way of credit note. And credit note must be linked to the invoices. Earlier, you must be knowing there was dispute whether credit note can be issued for multiple invoices. Yes, initially it was problematic when we were filing GSTR 1 and credit note was supposed to be linked with the individual invoices. Provision got amended. Now a credit note can be issued for multiple invoices. Second, and when this credit note is being issued by the supplier and charging tax on that credit note, then to that extent, buyer or recipient need to reverse ITC to that extent. What is this provision? Let me explain by way of an example. Let's say I'm a supplier. I have raised the invoice for 100 rupees, charge GST, let's say IGST, interstate supply, IGST at the rate of 18%, 18 rupees. And you all are my buyer, recipient. You have availed the credit of 18 rupees, but there was an agreement between both of us before or at the time of supply, which talk about post-supply discount or incentive. So you must be knowing certain incentive which is being given post-supply depending upon different milestone which has been agreed between supplier and recipient. What could be milestone? Trade discount, cash discount when you make the cash payment. Trade discount means if you sell this much of quantity, I will give you this much of discount. So that is what the example of this incentive or post-supply. So let's say there is a 10% agreed between both of us that I will give you either cash discount or trade discount depending on milestone, certain condition between both of us. Once you satisfy as a buyer or recipient, you are entitled to get this post-supply discount or incentive. Let's say you have achieved that milestone, 10%. Then I am supposed to, supplier is supposed to give you 10 rupees discount to you. In that case, what he would be doing, on a credit note issued by the supplier for 10 rupees, he will again apply 18% IGST. GST rate 18%, IGST 1.8, and which will be issued to you, and this credit note adjustment are being entered in table 9 of GSTR 1. Now in this case, when I'm issuing a credit note, supplier is issuing a credit note, and to the extent 1.8 GST component on this 10 rupees discount or incentive, supplier is entitled to adjust this 1.8 with his outward tax liability. With his outward tax liability in the tax period wherein he is issuing the credit note. So to the extent of ₹1.80 मैं अपनी आउटवर्ड टैक्स लाइबिलिटी से एडजस्ट कर दूंगा, यानी मेरा आउटवर्ड टैक्सेबल जो लाइबिलिटी होगी उतने से कम हो जाएगी. मुझे एडजस्टमेंट मिल गया, सप्लायर को बेनिफिट मिल गई. To that extent, I'm sure you must have understood. Now, as per condition under section 15, subsection 3, clause B, is that when you as a buyer getting this post-supply discount or incentive on which I have adjusted 1.8 towards my outward tax liability, you as a recipient need to reverse ITC, input tax credit to that extent. Quite obvious logical mathematics. When supplier getting adjustment towards its outward tax liability, you need to reverse credit to that extent, right? So ultimately, initially you availed credit for 18 rupees. Since you got credit note for 10 rupees, ultimately transaction was of 90 rupees. So credit would be restricted only to the extent of 90 rupees, right? That is the reason this ITC reversal provision is there under section 15, subsection 3, clause B. Having said that, what are the challenges and problem? First, whenever supplier issuing credit note in GST, it is in having a time limitation as per section 34, subsection 2. Earlier it was September next financial year or date of furnishing annual return, whichever is earlier, but with effect from 1st October 2022, it is 30th November of next financial year, following the end of relevant financial year, or date of furnishing annual return, whichever is earlier. So it has got time limitation. So question comes, if at all credit note to be issued in GST, for which adjustment of tax in the hands of supplier 1.8 rupees, which I discussed, and reversal by the buyer of 1.8 rupees, within GST possible only when credit note is issued under GST and it is being shown within time bound manner 30th November and properly shown in GSTR 1 of the supplier through table 9. This is the condition. Now here you need to reverse credit once you are getting this credit note, wherein your GST number, buyer's recipient GST number is being mentioned. You will see this transaction, and to that extent you need to reverse credit. So apart from time limitation, second challenge for the supplier was that how supplier will come to know that recipient and buyer has reversed the credit to that extent. Initially there was challenge, and to that extent there may be a case whatever adjustment is being done by the supplier can be disputed at supplier's end because of non-reversal of credit by the buyer recipient. But there was no, initially there was no mechanism, but things are getting smoothened. Transactions are now moving from GSTR 1 to GSTR 2A and 2B of the buyer and recipient. Matching is happening, but supplier has to ensure that this credit of rupees 1.8 is reversed by the buyer recipient to get the benefit of 1.8 adjustment which is being done by supplier with its outward tax liability. Second part. Third part. Can we issue financial credit note, commercial credit note without GST? No GST. Let's say as a supplier I am supposed to give you 10% post supply incentive or discount. Can I do without charging GST? Answer is yes, it is possible. And for that you need not require to charge GST. First advantage. Second advantage, there is no time limitation like 30th November. Whenever you talk about financial credit note or commercial credit note. But in this case, neither supplier will get any adjustment of 1.8 because he is not charging GST with its outward tax liability. So supplier issuing financial credit note or commercial credit note, it is with no time limitation and no GST charge. Correspondingly, it is not to be shown in table 9 of GSTR 1 and no adjustment of 1.8 with outward tax liability of supplier. Simultaneously, you as a recipient and buyer need not require to reverse any ITC input tax credit pertaining to financial credit note or commercial credit note. Hope this aspect is very clear to all of us. Last component of this video. We are finding a lot many dispute is arising now, and this dispute is pertaining to, let's say supplier is not issuing a credit note for any incentive or post-supply discount. You as a buyer and recipient is raising debit note to the supplier with a GST leviable on that debit note or not. That is the big dispute has arisen, and we are finding a lot of litigation has started. What department contemplating, and they are saying, when you as a buyer or recipient getting some incentive from the supplier, and you as a buyer or recipient raising debit note to the supplier, then department apprehension is, it is towards supply of services from your side, as if you have given any services to the supplier. Hence, on that 10 rupees amount, you would be charging GST. That is what the dispute. Whereas, what we are contemplating, that this 10 rupees debit note you have raised, it is towards post-supply discount or incentive. So it's a subject matter of reconciliation. Substantiation through a documentation. And you have to be very careful. When you are raising 10 rupees debit note, which is pertaining to any incentive or post-supply discount and not charging GST, quite obvious, you will not be showing in GST R1 and will not be showing as outward tax liability, neither in 1 nor in 3B. But you have to have reconciliation done, because this would be part of revenue on credit side of your PL account. There has to be reconciliation and substantiation with the documentation. But department has started, and we are finding a lot many advanced ruling are coming out, wherein it is being contemplated that you as a buyer or recipient raising debit note, it is towards supply of service, as if supply of service provided by you to the supplier, hence GST leviable. In my humble submission, if it is towards incentive and post-supply discount, which has been agreed between both the parties, then you need not require to charge GST, but you need to have documentation ready, substantiation ready accordingly. But if you are raising any other invoice pertaining to any incentive or any amount by whatever name called to the supplier and getting paid for that, then there is chance that definitely it is towards supply of services and department contention GST leviable. So you have to be careful about that, what is the transaction you are referring to and for which you are issuing a debit note. So this is all in this video. I have tried my best to clarify a position that what is the concept of credit note. We will touch base with lot many examples in time to come and discuss these components in practical way. Hope you are liking this video, and conceptually with the concept it is getting clarified to all of you. So my only submission, stay tuned, subscribe to our YouTube channel, get connected. So whenever I am uploading any new video, you are being notified immediately, because once you subscribe, you are getting this benefit. And importantly, free of cost, no charges. We are only trying to make GST as good and simple tax. Thank you. Thanks for watching. Thank you very much.